All right, folks, how you doing? Ordinary Income back today. Just wanted to make a quick video of something I saw on Twitter, in particular relating to the futures market. Now, I'll give a quick primer, but the futures market you'll probably hear a little bit about is it's just like contracts being traded back and forth regarding an underlying security. And this is probably a much better definition here than I can do in like 2 minutes, but pretty much I'll just read it off that it's a financial contract obligating the buyer to purchase an asset or the seller to sell something at the predetermined future date and set price. It's exactly what you think. It's contracts. There's an agreement being made that I'll buy something from you. I'll buy this object from you at a certain price, or I'll sell it to you at this price, and you lock it in and you wait until you get to that day. And when the day comes, you either pay for that thing or receive the object that you paid for. That's pretty much what a futures contract is. There's a whole futures markets on a lot of commodities, securities like the S&P 500, the NASDAQ. There's international ones as well. But in particular, these markets kind of dictate a lot about the price. They're the ones that set the pace a lot for oil, for the S&P, for the NASDAQ, for a lot of things. They trade more hours as well than just the common stock market. They're usually, like in America, they're about every day except for Sunday, or every day except for Saturday, apologies. So they'll open at Sunday at 5 p.m. Central, and they'll trade every day with an hour break between 4 p.m. Central to 5 p.m. Central, and then they'll close on Friday at 5 p.m. and stay closed until Sunday at 5 p.m. So that's how it is they're a little bit longer, a lot more hours. In particular, they do overnight during the week as opposed to the regular market that does not. But they also are key primers as to how prices are going to be operating. In particular, what I noticed was milk futures was something that had skyrocketed up. And if we even zoom out on a weekly chart, we'll see that since 2021, these babies have gone ridiculous. Why does it matter the milk futures going up? For the reason that you're thinking, that these futures kind of indicate the price, the way prices are going to be set for the things that they're tracking. So milk futures are going to resembling that. Milk is going to be getting a lot more expensive. It's a big deal because as much as people are not interested in dairy or they're not interested in consuming animal-based products, milk is used in a lot of things like your desserts, a lot of other foods. You use it for cooking, you use it for many different varieties of things. It's a lot bigger than what people think, let alone making cheese, I believe, making any sort of foods, any kind of additional supplemental foods as well. And the obvious one being that it's a big source of calcium that people want to intake. So with milk going higher, as well as the fact that it impacts people who drink coffee, that you are drinking milk with it. With milk going higher, it's just another thing that's been brought to attention of the different commodities, aka the different groceries that you and I are going to be paying for. And there's futures markets for a lot of things. I want to focus on milk today because it's something that I personally love, but milk is like my favorite thing in the world. But knowing that it's going up does not make me feel great because I know now it's going to be either I have to purchase less milk at a time, I have to stop drinking milk, or I have to pretty much suffer the costs of paying more for it, let alone the fact of cream cheese as well. So all those things that milk is used for is going to be getting higher. Milk itself is. But this isn't the only thing that you can track. You can also track things like orange juice, which has also been going higher. Cattle, aka cows, which will impact the price of steaks and meat. Coffee futures as well. All these things are going higher. And so usually they'll be brought in by the CME Group, Chicago Mercantile Exchange. They're the ones that kind of are market makers on these futures. They're the ones housing it. Let's say if you were to buy a contract of milk, let's see what the specifications are. Let's do orange juice. So you can take a look at it, and actually let's do milk futures as well. So a lot of these futures contracts, they don't necessarily trade like one for one. What happens is there's the specifications. If you buy one contract, it'll cost you a certain amount so that you can receive delivery on 1,000 bottles of milk or something like that. So usually CME Group is what I'll find it. I'll go to settlements here, and once this page loads up, it'll give you information on how much. Usually it'll give you information on how much is trade. Maybe it's specs, my bad, it's specs. So for every contract, 1 unit is 200,000 pounds of milk that you're purchasing here. And it's not exactly $24.38. I think that's like what it's quoted in something. It's $24.38 for a certain unit, and then you have to multiply that unit to get to 200,000 pounds as well. So it's not that you're going to purchase 24, you're going to spend $25 pretty much and get 200,000 pounds. It's a lot of money when you take into account how much this is quoting in units, because it's not quoting in 200,000 pounds. So you would purchase one contract for the delivery of 200,000 pounds. One, this expires usually every quarter. But so that's pretty much a primer in futures that I wasn't expecting to do. But the main part is when you look at the futures prices for things that you want to consume, and we could take a look at other things. Let's say you're big into grain, so there's corn as well, also higher. I showed you coffee. Another way to look at coffee is Joe. It's stagnant a little bit here, but if you look at the weekly chart, I mean, it's been going up as well. Wheat is another thing. ZW, I know for sure, having a little bit of a drop, pullback. Oil you can look at, and there's going to be plenty of them. Usually there's crude oil, which is CL, and you can see that's had higher prices as well. So all these things are important. Oh, there's soybeans. Yes, soybeans I think has just joined the party as well. How about them apples? And cocoa or cacao, however you want to pronounce it. This one's been a little bit more stagnant. It hasn't gone anywhere for a while. But all the big ones that you want, corn, there's some of them have like spin-offs and ETFs like this one, corn, wheat, all the things that you and I are eating. You can notice this by looking at the futures price to see what their prices, what at least the rate of change of those prices are going to be. And when they start falling, that'll give us a good indication that maybe prices are going to drop. There's always going to be a lag. It's not if, you know, we can take a look at crude oil in particular, because that's the one everyone is mostly hurt by, along with groceries. But if this thing drops, as you saw, it went from 123 barrel to 95. This price won't be reflected right away. Oil might be tricky because there's always geopolitics that go into it, but let's go back to milk for a second, which was DC. And if I can, milk. So if milk all of a sudden goes from 24 to 28, doesn't give me the units per unit or whatever. 1 inch, how about them apples? 24, 28, and it drops to like 19.50. That price isn't going to change automatically the next day at your grocery store. Usually you won't, I'm guessing it won't be changing until that new shipment that the supplier bought the futures contract on comes in with that lower price. So it's going to take, you know, sometimes it'll take a week or 2 weeks, but I'm guessing it would take a couple months for the rate of change price to be reflected. So keep that in mind, that when you're looking at futures, when you're looking at contracts, that price is at the instantaneous moment. The things you're buying is not instantaneous. Milk is not going to go from the cow to the grocery store in one day, nor will cattle or anything like that. But if you're ever curious, you can always just type in the thing you're looking at along with futures contract. And usually look for things like bar chart or CME group will be the things that I always rely on. A lot of them are commodity based, like metals, grains and all that stuff, but you could do copper futures, say, you know, if you're to see how much your penny costs, and there you go. CME group, investing.com isn't bad either, but I would stick with either CME or bar chart. Will give you an idea, and you'll see right here what is going on. So that's a quick primer. What does it mean for you? I've been saying this before, but I think it means higher prices at the grocery store, which is unfortunate for everyone, including myself. But you know, these are things that you can't really change. You can't do much about it. There's nothing you could do about the price of milk or soybeans unless maybe you're a farmer. But in the meantime, you know, it's a great opportunity to be spending time to be gaining more skills, to be learning new things, to become valuable in the market, so you can get more money at your job. That's the idea. The best way to fight inflation is, the number one way you're going to be able to fight inflation and these higher prices is by getting more money from where you're currently working. You either get more money at your current job or start a side hustle and get money from there. How do you get money from your current job? To be able to pay for things that are getting more expensive, you got to provide some more value. You got to provide some skills to them. So keep that in mind, folks. If you're ever curious about ways to, you know, gain more skills, I can shoot you all some links as to things in the tech space, programming of sorts that I use that have helped me a bunch. So that's all for today. I hope you enjoyed, and I'll be back later on this week. Have a good one, folks.